Welcome back, everyone, to Weekly Update, week 50. So, I wanted to start off this week. After everything that's happened, gold still approximately 1500. So, if the trade war is indeed over, and if it's obvious and it's not like a people are doubting it type thing, and it's actually over, or if it gets to a point where it's over, so it doesn't even have to be now, but let's say some point down the road, it's clear trade war is over, and then gold doesn't make a move lower, that would be the signal for me pile to some more gold stocks. I know we have a better cost basis, but if that happens, it's going higher. Because for now, it, I don't know why people or institutions decided to buy gold now, why it broke out now. I don't know. So for me, my one point of cautiousness is, well, if they bought it for some reason that was very different from why I bought it, are they now going to sell it? And if so, could get a move downwards. And if so, the stocks could be clipped, even though they seem to have discounted much of the move up. But if that feeling reverses, well, then it could be fun again. So that's what I'm watching in the gold space. So the working group for uranium, what resolved out of Section 232, or what came out of Section 232, that group is due for a decision this week. Now, personally, I said this when 232 was about to be over, and I thought, yay, we could get back to the normalness and out of this pocket of disruption. Well, basically, that is my same feeling now. There's some bullish possible outcomes. There's some bearish possible outcomes. I want to be clear there. Um, I don't think it's going to be something too big either way, but it could be. And we'll keep an eye on that, but I just want it to get back to the fundamentally driven market. And when I thought about fundamentals and fundamentally driven market, I'm just reminded that in the next 15 or so months, we have two decent sized mines, being Ranger and Cominac, um, that will be closing with no real work for a replacement opening up. And we'll probably see, well, maybe 6 to 8 from China, maybe a few in India, but we'll see about maybe a dozen reactors start construction. Maybe that's a bit ambitious. Maybe not. It's always a question of politics and permitting when it comes to how many reactors start building, but let's say approximately 10 to 12. And that would add demand down the road of 5 to 6 million pounds. And again, at the moment, we have very little work going into finding those pounds and making them producible. So those are the fundamentals that some of the fundamentals that I see. I've been meaning to do a full video about uranium because people seem to like those. But I've been upping from one a week. I was at one a week for a while. Now I'm at 2 a week-ish. I'll try and get back to that soon. So, despite me being in the camp that the trade war either still may not be over or and not wanting to bet on a boom when the trade war uh, resolves, because I don't think that there's going to suddenly be a boom in the economy. I do believe that the economy may be at an inflection point. And by that I mean it's come off. significantly, especially if you look at the cyclical stocks, and it is at a point now outside of recession, like the US economy, the world, there's certain places that are in recession, certain places that are out of recession, but the last few, let's call them strong economies, um, those outside of recession or that are doing well, um, well, let's say the US, for example, if the if it moves downwards from here, then it will be moving into recession, and we can start seeing those negatively reinforcing uh, things, which more deflation, people stop buying because they're scared about a recession, and it just accelerates downwards from there versus the growth that we've seen. Because if that doesn't happen and we reverse upwards from here, then growth continues and we can see a significant move to the upside. Now, I don't know if we're at the buy commodities point now or if they go much further lower because there's a recession. But the interesting thing about the point we're at now is there's a few commodities that are at fair prices, and if they go much lower, you're going to see a fair amount of production shut in. And if the equities, at least of those commodities, if the commodities recover, then the equities could move up significant amounts, maybe multiples of where they are now. So from that, I look at it as a interesting point to buy, to look at buying some of the equities in those commodities. But there is at this point still significant risk. I'm just thinking about the math, and the math says, oh, and shipping. If anyone out there has been following shipping, I've been following VLCC rates closely for a week. I mean, closely, very closely for a week now. I was following before, but in the past few weeks, VLCC rates have gone ballistic. They've gone hyperbolic. And the one thing I want to caution people, well, there's a few things I want to caution people when it comes to shipping. So be careful because although VLCC rates, so crude oil, in one of its forms, have gone up a lot, finished products, that's processed crude oil, have not. They've gone up a little. They've done okay. And, some of the tankers that have been carrying finished products are able to swap to crude. And so that will take down the crude, rates a little bit and add demand for finished products. And so there's a bit of overflow that could happen. And we could see a sustained period of quite profitability. That being said, these rates are also very, very volatile. It could move down immensely very soon. And if you look at the equities, they know that because if you were to price in these prices for a year for the equities, well, then they'd be many multiples of where they are now. But they're not because they know that these prices are volatile, as do we. So on one hand, you have that. On the other hand, many of these equities are still trading at a discount to their net asset value. And on the third hand, because all humans have three hands, everyone knows this, um, the Baltic dry rates are just kind of just hanging in there. They're not really doing great. So the point is very volatile, many different types of products, and not all shipping stocks are the ones that are booming right now. So, and I mention this because two of the ones that I've talked about, Scorpio is finished products, and the finished products are just doing okay. So there's no crude exposure there. Well, there's no direct, they could swap some of their ships, but there's no exposure to the VLCC spike. So many of the rates move in sympathy, but overall, this whole proposition is starting to get a bit messy right now. Obviously, I haven't sold anything. I think it's still potentially very early days within the equity pricing, but there's a lot out there to be cognizant of. So the picks for the week. The first pick is Trevally Mining. Now, this is an interesting zinc play in that if the economy, the global economy kind of picks back up from here, I could see it making basically its market cap worth of free cash flow in a year. If all that would have to happen is zinc prices would have to move up to part of the way between where they are now and where they were. And we're talking multiples here. That being said, if zinc prices move much lower, I happen to believe there's probably almost a floor around $1, unless things get really bad. But if it goes badly, well, then they're basically worthless. But the math is interesting from here. Second call option, I guess you could call it, well, because that Trevally is basically a call option, is more Cameco. Now, the segment of the portfolio here, if it were around, I'd probably be going with the new uranium mining ETF, but for now, we'll just add to the Cameco call options. It's been a few weeks. Don't want to get too heavy on call options, but there we are. Next, Lucara. So Lucara is obviously in the diamond space, obviously one that's been in the portfolio for a while. Hasn't done well, obviously, but the point is, it's amongst the diamond space, it's a very well-established company. And so they may have to cut their dividend, but my point is they're not really going anywhere. They pay out, at this point, it's like a 9% dividend or something. But I like their long-term prospects, and I've realized that despite this big move down, I bought once to kind of say something about them, but I haven't really been adding to the position, and I really should have. Based on the outlook that I've had for a few weeks now, and I've just been focusing on other things, but here we go. So those are the picks. So that's it for today. Hope to get a second and maybe a third video this week. Things are getting less busy in general, but still they're, after those few months of craziness, still a bit busy, but hope you enjoyed this one, and I'll catch you next time. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses incurred from investment decisions made as a result of information obtained on this channel. Good luck with your investments. I'll catch you next time.